Gurmeet, sir, are you able to listen to us?
Yes, am I audible, Mishika?
Yes, yes, you are audible. You are audible. Yeah, so we can start now. So, a very warm welcome to all of you. And today we are going to discuss everything about investing with our guest speaker, Mr. Gurmeet Chadha of Complete Circle. So, good evening, Gurmeet sir. We are delighted to do a spaces with you.
Thank you for having me. And what a start to the new financial year today.
Yeah, it was an amazing rally in our broad markets and a very good news in the morning, and then our markets rallied like lazy. So amazing start today. So sir, I had one question with you. The first question, nothing at all. The first thing, sir, please introduce yourself and tell us how you started your journey, how the markets have treated you, and how did you venture into the finance industry, everything about your career and all.
Sure. Uh, so I'm actually a perfect example of that. Everything just happens, and you don't have to really plan too much, which is actually contrary to what we advise a lot of investors. So I come from a small town called Sagar in Madhya Pradesh. While the name is Sagar, there is hardly any water there. So it's a bit of an oxymoron there. I did my schooling and graduation from Sagar University, which is Dr. Hari Singh Gaur University. And we have a family business. So my father is a distributor and CNF agent for Dabur, Colgate, Pidilite, some of the FMCG brands. That's why you would see me also a lot tweeting about it, because that happens to be a family business. And I didn't want to join my family business because in Punjabis and especially Sikhs, you study less and you join your family business first. So I wanted to do my MBA, a master's, and because I didn't want to join my family business and my shop, and that's when I went to Indore. I did my masters, and 2002 was a bad year. The tech bubble bust, and not many companies came to campus. So the first company which came to campus was ACC Cement, and fortunately for that day, I got selected. And the first career started with ACC Cement being posted in Punjab, handling South Punjab and North Punjab. Uh, I stayed in a cement factory for 1 month because I was from a non-technical background, and my friends actually joined SDFC, ICICI, Citibank, and I had a very boring career because in cement you have to get up early, and around 12:31 you're free. And I saw my banker friends working late, partying, then doing month-end parties, and I used to miss that, and that's when I decided to join. I always wanted to join a bank, and from SDFC Bank in 2004 is when my liking for investments happened. I was in the liability side of SDFC Bank. I was responsible for opening up branches, setting up the CASA base, and cross-selling, third-party products, including mutual funds. Um, and that's when the love for the equity came, and I got some ESOPs, so that got me hooked on to SDFC. And that time SDFC had a very one of the best ESOPs policy, which is actually my pinned tweet. That's one thing I regret in terms of leaving SDFC Bank too early. Uh, and then there was no looking back. I developed a long interest for investments, and then I joined Reliance Mutual Fund, which is now Nippon Mutual Fund. Uh, then I joined Citibank as their head of investments. I was the vice president and head of investments for North. I can see Mohit here. Mohit used to head West. At that point of time, we were contemporaries. Uh, and From City, I started Complete Circle, took a leap of faith in 2015, and God has been very kind. I mean, it's been 6 years, 6.5 years now. And as an investor professional, I started very early in terms of my SIPs and all. I had this colleague of mine who used to ensure that whatever conveyance he claims, he used to put that in an SIP, and otherwise that money used to get spent, and that's when my journey started. And I have said this before, I have had no multi-baggers. I have not, in fact, there's not a single stock I have made 12, 15x. I think my best stock would have been probably Bajaj Finance and HDFC Bank, where I would have been an 8, 9 bagger maybe. But I've done a great job. I've achieved good returns. I've in fact never bothered to check my returns vis-a-vis Nifty. I find that uh, I don't find too much merit in it, but I've done well. I'm very close to what I wanted to achieve as a in terms of financial independence. And I think if all goes well, maybe couple of years actually my passive income should take care of my basic lifestyle. And it's been a great learning journey last 18 years, very rewarding. And Twitter has been a great platform. I can see Aditya here made so many friends here. My partner Kshitij also is on the call. I'll ask him to join us some point of time. Yeah.
Hello.
Yeah, I'm there,
Am I
Mishika.
audible, sir?
Yeah,
Yeah,
you
yeah,
are.
perfect. Sir, also like in our society, investing is not yet recognized as a proper profession. Like, अगर आप बोलते हो that आप एक investor हो, तो लोग वापस से पूछते हैं, अच्छा तो आप करते क्या हो? तो how do you deal with such questions, or have you ever faced such questions yet?
Yeah, I did actually. In fact, Ramdev Agarwal ji used to tell us, who heads Motilal, that उनका उस जमाने में शादी कैंसिल हो जाती थी कि ये ब्रोकर है, लड़का शायद सट्टा करता होगा, स्टॉक मार्केट में करता है. So it wasn't easy for me when I got married in 2009. You have to explain, and you know how what the education level in Punjabis are, right? People anyways don't study much in business families. So in fact, Kshitij is here. Kshitij, when he joined Motilal Oswal, he had to explain that he's not part of the Oswal Ludhiana group, which is into sweaters and pullovers. It's actually financial services, right? So yeah, it's tough, but I think now it's catching up. I think people, thanks to television, thanks to social media, I think there is this massive equity cult growing in this country, which makes me so positive. I mean, I was having a chat with Kshitij sometime that I have not seen $20 billion of redemption in 2 months in my career, and still Nifty withstanding that kind of pressure. I think this is something which we haven't seen in. Uh, and whenever FIs have sold even $5-10 billion, we have seen very sharp drawdowns. And I think this is very encouraging. Very early days, but fingers crossed. I hope this trend sustains.
Well, that's such an amazing journey, sir. Like बात करते हैं ना हम कि about diversification, like we should maybe diversify across various stocks. I think you have diversified your life into various aspects, like exploring, or maybe we can say experimenting the various aspects, like maybe the job aspect or the investing aspect, and then probably finding out the perfect balance between them. So my next question will be like what's your view for the financial year 22-23? Like in the past 2 years we have seen such a uh, big rally, like I would say 50%, 60% sharp rally. So do you think will there will be like such mega trend should continue or not in the upcoming financial year? And like regarding the sector rotation, like what do you think, like what are the major sector rotations which might take place in the upcoming year?
I think since I'm on the fundamental side, and I always prescribe long term investing. I think ये जो थोड़ा trend है हमारा, while I myself do a lot of shows on this Samvat, next new year, this fiscal year. I think this is one reason a lot of investors face high expectations and then poor performance. I think this business is not about this year and next 6 months and next quarter, and you learn it the hard way. People who are new, probably they have seen very fast returns, and sometimes and very fast sector rotation, as you pointed out, and we tend to get carried away. I think this business is more, it's just, this is, it's all about keeping it very boring, keeping it very simple. So there are few trends which I think are very long term and not just confined to 2020, 22, 23. One trend which I clearly see in terms of my interaction with various corporates and finance, CFOs, etc., is this digitization which is happening. I think this is no longer discretionary. um, IT companies are no longer doing just simple certification and accreditation. Now they are getting into deals which are transformational in nature. You would have heard Infosys and most companies talk about GNT deals, growth and transformation deals. So they are developing, co-developing innovation centers. They are bidding together for new businesses. they are developing basically solutions. So that's when your pricing power goes up, because you become part of the change. So it's no longer that you have to do it. And I think, and this, and even in downturn, if you get time, just see the breakup vertical wise. A lot of these IT companies have, even travel vertical, when it was facing headwinds, was investing in technology. Even multiplexes were investing in technology. Hydrocarbon energy had a tough last year. You remember oil getting to zero and prices remaining
Yes,
subdued.
yes.
They were investing in technology. So I think this trend is here to sustain. Look at, for example, Infosys. If you, and I always tell this to people, whenever you get time for your favorite company, just listen to the earning call. I think it is so refreshing, and I know in a quick 20 minutes you get a lot of updates. So Infosys talked about $2.6 billion of order book, and then they gave a breakup, right? So their digital is now 58% of the revenue. They have some 1,700 active clients. They've made buckets. ये 100 million वाला है, ये 200 million वाला है, ये 50 million वाला है. So it is the deals are happening across the buckets. The focus, as I said, is into more annuity and more transformative deals, which means the trend is here to sustain. So, and there are newer spend. While I still think cloud adoption is probably in the mid stage, you are seeing new spend areas which are emerging, which is cyber security, cloud security, connected devices, mi, artificial intelligence. So what you are seeing now is that you're probably in the early to mid stage. Yes, you don't have to overpay. You can't pay 1800 p for IT services companies. So I think this is one clear trend which is emerging, which I call digitization. The second, and here you can do a combination. I mean, I was telling somebody, BSc IT index, total return index, last 5 years is 30% CAGR. तो आपको अगर नहीं समझ में आ रहा है, BSc IT index, you can just put money and you would have made a killing in last 5 years, right? Then the second trend, which is clearly emerging, is this, financialization of savings. I've 1 lakh demat accounts getting opened for last 1 year is phenomenal. I mean, 75% is below 30 years of age. See the way number of folios are getting added in mutual fund. See the net equity sale. This balance advantage category, I think it's been a huge balancing factor in the market. When Nifty was 18,000, they were at 40% in equity average. It's a 1.5 lakh crore category. So when the markets fell, they contributed a lot of money by switching money from some part of money there. So I think this entire whether you want to take private banks, you want to take insurance, depositories, RT agents, I think this is a clear trend which is emerging. The third one, which I think is this changing energy mix. I think the energy consumption is going up very clearly. The mix is changing. Now, we tend to get carried away by, renewable energy and all. There was this India Manufacturing Forum, 2 days back. I don't know how many of you got a chance to, listen to it. There were people from, Tata Power. Mahesh Paranjpe was there, and he made a point that we expect about 35, 50, 40 gigawatts of power to be added every year to meet the 500 gigawatt target, which government has by 2030. Which means even your thermal plants are not going anywhere, at least for next 10, 15 years, maybe more, right? So I think sometimes you get excited and say, this is the next energy, let me bet this and pay a disproportionate price. I think things will coexist, and you will see a huge turnaround happening. So Tata Power obviously is getting into EV charging. They are one of the beneficiaries of the solar energy components. Government is supporting through PLI, through removal of BCD on the solar module wafers. They have this scheme called ALMM, where you are identifying the module manufacturer. So lot of stuff happening on the policy stuff. Then there is this ethanol story. Kshitij is there. I'll ask him, ask you guys to add him, and we will discuss that, during the course of the call. Uh, then there is hydrogen, which Reliance is extremely good. So I think this energy mix is something which is again very very long term, and you have to play a portfolio approach. Get EV players, get solar players, get the hydrogen players, get the ethanol players. We don't know what will work more. With things, it's a jigsaw puzzle right now, but things will improve. And the last one is this entire manufacturing. I think this PLI in manufacturing and this capex revival, to me, is something which is right now not many of us are understanding what is going on. But I meet promoters, I meet entrepreneurs. There is so much of capex plans and actual capex which is lined up. Uh, uh, a lot of it you will see over next 2 3 years in terms of this playing out.
That's some amazing insights. I think everyone here should be noting down the points because just listening to something is something जो कि हम सुन रहे हैं 2 दिन बाद 3 दिन बाद सब भूल जाएंगे. I think everyone should have some paper pen, note down all the things which sir told about artificial intelligence, machine learning, energy, manufacturing, and all these things. And see, guys, the purpose of all these sessions is not just to give you detailed things. We are here to give you the basic knowledge about things. Like sir told about the session which took 2 days back. I think one should note down that and maybe watch the whole session and then come back to sir and ask if you have any further doubts. I think sir will be very kind to reply to the doubts and all these things because there might be 100 listeners here, but out of 100, there might be 2 or 3 people who will be very sincere. And if you put in efforts, I think that's something which make you different from a very good investor and a mediocre investor. Yes, over to you, Mishika.
Yes, sir. So we also wanted you to cover this Gati Shakti plan, like as we have received our first outlay of 20,000 crore for the year 2022 and 23. So, what are the sectors, I mean, what are the spaces that you see, like company wise, or, what type of benefits do you see that, we can explore in this space?
Sure. I think all of us, when the Prime Minister made the announcement for, Gati Shakti, uh, announcement. I think it was 15th August. If we were watching this. So obviously, there's a transformation they want to happen, connecting road, ports, infrastructure. And I think वो थोड़ा, whenever any scheme is launched, there is a lot of hype around it. I think a lot of the effects will take time to pan out. Um, I think the beneficiary clearly is infrastructure. The Just give me one sec. So sorry, there was a call. Yeah. So I'm saying the I think one key beneficiary to me, and I monitor this tender activity very closely. In fact, this is government data, and I urge all of you to watch. So I think one clear beneficiary would be capital goods, and I think this is one sector which, with all the tall promises, hasn't really delivered as far as the shareholder return is concerned. Let's say, for example, L&T. I think I've been seeing L&T for a in a certain range for a. And I mean, this is not a stock recommendation. I'm just trying to. So if you look at the tender activity right now, and let's say if you pick up its Q3 numbers of L&T, which was actually a little tepid, you will figure out that they had orders across the segments. So there was hydrocarbon, there was metro, there was high speed rail, there was water supply, there was health infrastructure, there was power transmission and distribution. So their order book came a tad low. So right now their order book is some 3.4 lakh crores. Order book has never been a problem. It's always been the slow execution. They also have refinanced their Hyderabad metro limits which they have. They've spoken to Telangana government, so I think it was a big drag on the balance sheet. What I'm trying to basically say, if you see the tendering activity, the tenders which come, which is in public domain, the tendering activity now is upwards of 3.5 lakh crores. ये सिर्फ tenders issue है. Right? So a lot of this will get translated into actual contracts, and a lot of which the ownership and all will also change. So that is one. The other way to play this is you have to pick up a sector which is completely beaten out. Let's just pick up something like, let's say, commercial vehicles. Right, very bad 2 years. Industries contracted. Now the raw material cost is up. COVID happened. Mobility got suffered. In general, there was a slowdown. You know, so I remember one point of time Ashok Leyland was available at $40. वो साल का 30,000 करोड़ का ट्रक्स और बसेस बेचता है. उसका मार्केट कैप जो रह गया था वो 12,000 करोड़ रह गया था. So it was available one third sale. So obviously, that point of time everybody thought that there'll be no trucks which will be ever made, right? So I think that the best way to play infrastructure is pick up businesses which have great good promoters, good track record of seeing down cycles. If they've survived this last 3-4 years, my sense is this is the worst they would have seen in a long time. And then the economic. So if you see now the schools are reopening, so the sale of buses will go up. Because of GST, the light commercial vehicle sales has picked up, right? Because of the interport connectivity. There's a lot of stuff. Let's say since we are discussing Ashok Leyland, they have a UK subsidiary which is into EV mobility called Switch. They are launching new models and all. So I think if you're a believer that in India the investment cycle will start, if you are a believer that we are in the early stage of capex cycle, I think a lot of good capital, good companies, and CV could be one way to play this Gati Shakti, which I think is again do not have 1 year expectation, because in these things, the contracts are lumpy, the execution takes a lot of time. So this is not a 1 year, 2 year thing to play.
Uh, nice, sir. Sir, we often listen to this term called diversification. Like as an educator or as a normal person, like we knowingly or unknowingly we apply this concept. Like as an educator, as a teacher, I often apply this concept. Like let's say I teach 100 students. So out of 100, there might be दो तीन nalayak students, and there might be दो तीन या पाँच छह अच्छे students. So they kind of balance out the whole class such that the overall performance goes not very bad or very good, such that even if there are bad students, they are being compensated by the super brilliant students. So in the same manner, so like what's your take for like diversification, and like diversification, is it necessary, or how much should one do, how much one should not do? And my second question will be diversification within the equity class or across the various asset classes, like which one is more important, and like if you can give us a little bit of brief about that, like how one can do that. Am I audible?
Yes, you're
Yeah,
audible,
sorry,
I
sorry.
think.
Am I audible now?
Yeah. Yes, sir.
Yes,
Yes,
sir.
sir.
Yeah. So I'm saying again, very good question, I think. And I think, I have a client who I consider my mentor when it comes to investing. I've actually learned more than I would have, imparted my knowledge to him. He always says that train ka आखिरी डब्बा नहीं हटा सकते आप, right? So if all of your portfolio is doing well, let's say you have 5 mutual funds and all five are giving you great returns, I think there is an issue, which actually means that you have ended up owning, almost the same thing. So some underperformance in the portfolio is good, which actually means you are, so one aspect which people don't discuss is correlation, right? So you should have asset classes which are negatively correlated. Yeah, basic hai, right? So even in sectors, since you talked about equity, you need to have a right balance. It doesn't mean if I'm bullish on IT, my entire portfolio should be 60, 70, 80% IT. This is the unfortunately, performance bikta hai. We monitor. I remember, there was a time when, I don't know which app for this, it was either Paytm or some other, they published the data of highest selling fund, and in 2019 it was HSBC Brazil fund, because at that point of time the Brazil gave very good returns for 6 months. In 2020 when COVID happened, the best selling fund was GSEC fund, because GSEC gave 20% return. So I think ये जो थोड़ा सा performance monitoring है 6 months 12 months की, this can be very tricky. We've seen, let's say today, HDFC Bank underperformed today. It in one day it was up double digit, right? So you can have periods of underperformance of even good businesses, good sectors, right? And you still need to give weightage to them with a hope, because returns are not linear, right? अभी IT ऊपर गया इसका मतलब ये नहीं है कि बैंक ऊपर जाएगा साथ में. So I think that weightage has to be is extremely important. So diversification is extremely important. Negative correlation is extremely important. And most importantly, which people miss out, is that do not confuse business performance with price performance. I think if you so let's say since HDFC is in the news today, आप HDFC का नंबर देखो पिछले 2 साल का, they were still doing okay. It's not that HDFC reported losses; they still had the best asset quality. Their net interest income obviously was growing in high single digit and early double digit. We are used to seeing 20%. Their loan growth was now matching ICICI, right? So they were not like really like doing 25%, 20% loan growth. They were doing, that was a time where even Kotak slowed down when COVID happened. And it was intentional because nobody knew how this will pan out. Now, when things get together, you suddenly see performance coming back. A lot of people have forgotten 2003 to 9, HUL gave zero return in the entire bull market. वो 200-300 की रेंज में ही घूमता रहता था. But when things turned around, it became 200 to 2000 in just about 8 years. Reliance, which is right now the darling of the markets, right, did not do anything for 4 5 years. 6, 700, $800 it used to be in a range. Mukesh Ambani was doing capex for Geo. There was 1.7, 1.8 lakh crore debt, and it did not do much. And suddenly, when they started monetizing Geo and retail, the stock went up 3x. So if you if the business performance is good, if the if things are return ratios are good, if stock is undergoing a time correction or a bit of a price correction, is actually is an opportunity. That doesn't mean that you should do it. And some underperformance in a portfolio is reflective of that you are diversified.
So just one follow-up question for this thing. Like you talked about, like in the markets, one should have patience. Like you talked about HUL. Like one question which I have been having this thing related to this only, that whenever we talk about entering into particular stock, that's something which everybody tells on Twitter, on various things are there, but there is no specific book or specific uh, thing like which tells about the right exit time. I think the exit thing is kind of a myth, or like, is it or is it not? Like I've been holding Maruti for quite a long time. And if I consider the return of the last 6 years, the 6 years return is almost near to zero, or maybe 5-6% for the last 8 years. But since it
Sure.
have been in my portfolio for the last quite few years, such that it's almost 5x or 6x. But if I consider the last 6 years or 7 years, the return is almost negligible. So how to identify, like, this is the time that I think one should exit the stake stock for the, for not for the short term, but for like maybe 4 or 5 years, this sector or this particular stock should not work, or maybe I should exit, or maybe I should hold to it, or like for how long should I hold to it? Like that's my question.
Right. So I'll tell you. So there are two exit strategies. So first let me answer your broader question. One, so my portfolio, my personal portfolio is core and satellite. In a core portfolio, my exit strategy uh, is not really there because I have a quantity goal. So me and Kshitij, my partner, we sat down. We said, okay, I need an X amount every year to let go of working actively. You call it financial independence, you call it retirement, whatever you want to call it. And then I started building quantity goals. So let's say, for example, I said I need to have 5,000 shares of Infosys, I need to have 3,000 shares of TCS, I need to have 3,000 HDFC Bank, I need to have 5,000 Tata Consumer. I'm just giving you names, right? These are not recommendation. We made a list of 18, 20 businesses, and we had quantity goals, and we are accumulating quantity. In fact, when it goes down, we are happy to accumulate more subject to liquidity available. Since we run a good firm which is profitable, we draw salaries, we get intermittent liquidity. God has been kind, so we keep adding. There, I do not have an exit strategy. My exit strategy will come once I achieve my quantity goal, because my strategy in the core portfolio is to grow it in double digit. I'll be happy with even 12-13%. I'm not greedy, and I want to have a 2-3% dividend yield, which is my passive income, right? Then I have a satellite portfolio where I study and research, and those are largely cyclical sectors like auto, like commodities, you know, like real estate. There are a lot of cyclical sectors, right? Where you think that it's a thing which will play out. So your entry point becomes important. At the same time, the movements are very very sharp. So you are okay in foregoing some upside if provided you have made some return. So whether it is commodities, whether it is auto, whether it is capital goods, there are a lot of cyclical sectors, right? uh, so in that, you have to decide basically your exit point, that I'll be happy making this much return. And then you have to be disciplined. Don't regret, oh, I should have stayed, I could have made more. It happens, and that's when you get into a trap. Now, coming to your question on Maruti issue was not just that the sector was not doing well. Sector was not doing well for everyone. Maruti was losing market share. Maruti lost it almost from 55, I think it's down to 47%. They made a conscious call of exiting diesel. They made a conscious call that EV in India will take a lot of time to get adopted. They are late into the EV cycle. They made a conscious call. They don't want to be into the SUV segment, which is now the fastest growing segment, which is where Kia, Hyundai, and Tata Motors have hit them hard. They actually do not have a good model above 10, 12 lakh rupees. That's one segment of the market which really grew very fast last 4 or 5 years. And then its margin came down to single digit. Maruti's margin 6 years back, when it touched 10,000, used to be 16-18%. Now I don't know, Aditya is there and Chit is there. I think the margin is now 7-8% or something, right? There's negative operating leverage. So I think in a similar time frame, Minda Industries, which is an auto ancillary, the stock is up 4x. Right? In a similar time frame, Escorts has done reasonably well in the last couple of years. Right? So I don't want to make it a stock specific discussion, but Maruti had a business performance issue which got reflected in the price performance. Right? Uh, Tata Motors today suddenly has started, is much early in the EV game, though it's still a small part of its JLR is still 80%. They are now clocking, I mean, they clocked 370,000 units last year, which is the best ever in a long, long time, right? And which is when Chandra made that speech on 31st March, right? So I think in the satellite portfolio, the exit has to be defined basis your view playing out, right? And it has to be a small part of the portfolio, can't be a large part of the portfolio. In the core portfolio, it should be linked to when you're approaching your goal, which could be your retirement, or let's say you want to plan something for your child marriage or a children education, something like that.
That was a very nice explanation, sir. Sir, also we have seen that the manufacturing sector, we have seen that so many new firms have entered into this space, and also the agricultural space, which is which results in two-third of the jobs in India. But then also it has been the slowest growing sector. But recently, in over the last 3 years, they have seen over 3.5x new firms enter this space. So, what do you think is the reason, and what has substantially changed in this space?
Sure. Mishka, can you also add Kshitij while I'll answer this question? Just add him. Na? He tracks few sectors very closely jointly. Yeah. So on agriculture, I think there is visible slowdown, which we see since I come from a tier three town in MP, and FMCG is the first business which gets impacted because that's directly linked to the rural economy. We are seeing a lot of because of inflation, because of price hikes undertaken by most companies. There is some, and also I think once the harvest comes around Vaisakhi, that's when the real money comes in. You will start seeing, and there will be efforts taken by the government also to kickstart. Uh, we've seen that impact in two wheelers also. That's also one. So even companies like Hero, etc., have seen a real challenge in the entry level bikes. We saw tractor sales, which is again very close, being very very tepid. So my sense is there are different ways of paying the revival in agriculture. One way is this ethanol story, right? I personally think this is and I was talking about the energy mix earlier. I think this is a huge story in India which will play out. So this is good for everyone because sugar sells for 30-31 rupees a kg, ethanol sells for about 55-56 rupees a liter. We are currently at about 9% mixing, almost hitting 10%, and we have to go up to 20, which means this will, you will probably from 500 lakh crore liters probably move up to 1200, 1300 lakh crore liters. There is a diesel mixing testing which is going on right now. Ethanol is not blended in diesel. That technology is still under research, which a lot of companies like Paraj, Isaac are doing. Then there is a second generation ethanol which is coming, where you can not only make ethanol from, let's say, molasses, you can make it from any kind of grain. So let's say rice or soya bean or any kind of grain. So and then the work is going on biofuels, which is compressed the gas. So I think one way of reviving this is getting agri involved in the on the energy side through ethanol. The other way is you play this PLI scheme and incentives government is giving towards fertilizers, crop nutrients, you know uh, protection, etc. There is one company which I've been very lucky, and this is, and again, not a stock recommendation because it's an SIP stock from me. I can see Prashant also under there, and so you can vouch for it. Is that uh, you know this company is PI Industries. A lot of you would have heard a lot of reports on it, how this could have been. So this basically they have two businesses broadly. One is your agri input, right, which is linked to the products PI makes, and an agri input is currently about 35-40% of their business. Used to be largely an agri input company. So इसका पहले नाम Pesticides India होता था. If some of you are old enough to so इसका पहला
Sir, your voice just got cut in between.
sorry, I was discussing PI, right? So
Yeah, yeah.
yeah, so this obviously, so one is agri import, which is into plant nutrients and seed production, etc. And then is their CSM business, which is custom synthesis business. Now this business used to be very small few years back. Now this business is almost 60% of the revenue. The management sees 20%. kind of a growth in the CSM business. So it's not only they are expanding their core agrochem vertical, they are also getting into newer verticals like pharma, like specialty chemicals. Um, so and and the best part about them is that whatever business they do every quarter on CSM, 20% comes by new molecules they launch. Last 4 years they've been commercializing almost 2-3 molecules a quarter. So this is a company which is doing great R&D. So they, for example, recently last quarter, if you would have heard management, they actually commissioned MMH, which is actually a new chemistry, building block. I'm tracking this space. They are focused on backward integration, and it's actually a technology company within, let's say, agrochem and CSM, if you want to simplify it. Then there are a lot of host of companies. So that's one way of, the energy, the plant protection fertilizer way to play the agri economy. Maybe later half of the year you can play through auto also.
Okay. So, how do you select stocks for your own portfolio? Like, what is the stock screening process?
Yeah, actually it keeps changing, but some of the parameters are fairly simple. So one parameter which me and Chitej often talk about is, we are a little conservative, so we like sector leaders, right? So we identify themes which we think are going to do well. Let's say if IT is a theme and I enjoy IT, and I think digitization is a trend, we would prefer to pick a, let's say, a Infosys or TCS. And sector leadership doesn't mean that it has to be the largest revenue or turnover. It's basically basis the specialization, the domain expertise, right? So if I want to pick up, let's say, an EV play within IT, I would then pick a Tata Elxsi or a KPIT, right? Strong companies in that space. If I have to pick up a company, which is, let's say, I'm very bullish on BFSI, right? BFSI spending going up, and also I'll pick up a company which is a leader in terms of the BFSI segment, contributing to the largest part of the revenue, right? So we pick up sector leaders and domain expertise. Few things are something we don't compromise. Me and Chitej, we are saying that, okay. Uh, if any in the past there is even any promoter has a checkered record, even if its heart has changed, I mean, we don't give him a chance, in the sense that i know uh, I know it's a little harsh, but we are small investors. uh, we are responsible for some of the investor money we manage. We don't really get into that zone. The third is few return ratios, which is, in fact, there's one filter which and I'll ask Shitish to add. If you put a 15% ROE filter of 6,000 odd stocks listed in BSC, you'll be actually left with 300 stocks. So there's a lot of elimination we do, and some mistakes will happen. And we try and figure out if this company is using, of late, technology as a mode to create a difference. Some mistakes will happen, and the biggest success mantra for us has been: identify it, don't bring your ego in between, accept it, and move on. Shidich, you're there.
Yeah, Gurmeet, you said it, rightly. I think just to add, although you have explained it so well, nothing much. But what I want to add is that cost of doing a business is India. Right now we are in low interest rate scenario, but over a period of time, it is close to about 9 to 11%, depending on rating of a company. And if your earning number or let's say your return on capital less than that, then that business will never be able to generate profits for you. So any business which is not able to generate profit for you, you'll be not able to make returns in the long run with that business. So eventually there has to be underlying earning of a business. If money making is so is in the stock market, having said that, if you understand it, you can actually generate some good capital for you. Then everybody could have done that. Any company would have said, why to run with such a huge plant infrastructure? I could also, invest in stock market and make some money. So we all need to understand there are young investors on this platform that you will make that much amount of money which company is able to generate for its investors in terms of the business. Over a period of time, you see Nifty last 25, 26-year return, or let's say nominal GDP of India, or Nifty companies earning numbers or return, it's in line with each other, which is close to about 12 to 13%. So we should go by not that and one of the colleagues on this platform asked about last year 40-50 returns. I'm saying if you have time on your side, even 12% can compound beautifully for you. problem comes when we start, and Gurmeet, you said it rightly, we start taking it that मेरा call गलत नहीं हो सकता है. We start booking our profits, जबकि we should always start booking losses. Profit should be accumulated over a period of time. Why any real estate property or a PPF balance bulges out? The only reason is because you don't keep on selling and keep on checking your portfolio value. And many people are asking when to exit. I have a small request. If you don't have time to go for each and every single stock, quarterly numbers, then I think either you stay with the blue chip of the blue chip companies. There are in top 50 also 15, 20 or 10, 15 very good names. Or you go through a managed fund route, which can be a mutual fund or any other platform route. Because there is an expert available, and doing it yourself, if you don't have time, might cause you and not making the type of return which normally market will give. और कुछ नहीं समझ आ रहा तो निफ्टी इंडेक्स फंड में डाल दो. नॉमिनल जीडीपी कंट्री का अगर 12% है तो उतना निफ्टी भी दे देगा रिटर्न आपको. सो आई थिंक broader thing is that in the power of compounding formula we all keep on focusing on the return part. जबकि the important element is time part. If you have time on your side, believe me, you can achieve what you want to.
That's such amazing
That's from my side.
insights, sir. Next questions will be like we often see this term known as the PE of Nifty or the PE of Sensex. Like, what's your take on this? Like the relation between the Nifty PE or the Sensex PE with the credit cycle, and like how one should actually read it to get a market view. Like the market is in a bull trend or a bear trend, or about the whole economy, like the economy is in recession or is in boom.
Sure. I think I'll explain, try and simplify. So, so Nifty PE, when we saw correction, when you saw 15, 700, 800 on the Nifty at the peak of the geopolitical crisis, the Nifty PE trailing had come down below 20. Now, just hypothetically, just to since there are a lot of the Nifty, let's say Nifty EPS is around 550. Let's say, for example, market came down to about 16,000. You divide 16,000 by the Nifty PE, you get the P multiple. The forward is when you assume a certain earning growth. So let's say if you're assuming earnings will grow 20%, for example, this 550 at 20% will become, let's say, 720, which is at 20% growth. So if you divide 16,000 by 720, you will then get a multiple of about 16, 17 times. So this is forward earnings. So traditional theory tells you lower the P multiple, the better. But this is not an absolute term. It has to, as you rightly pointed out, have to be looked at which stage of economic cycle you are in, right? So if you are in a growth cycle, and when interest rates are lower, uh, high P multiples can sustain for a longer period of time. We saw some of it play out during when we started recovering from COVID. Nifty P on an average actually remained between 24 to 28 or even 30 times, right? In a high rising interest rate environment, stagflation where growth is fallen, inflation is low, even a mediocre PE may not give you good returns. But ideally speaking, whenever, in my experience in the past, whenever you have invested money close to 30 PE or high PE, whether it is 2007, whether it was 18,500, 600 when the markets made recently, or in the past, including 2013, including some of the other even .com, the returns have been suboptimal. So if you're basically, when you are entering at 30, 35 p, you are basically saying markets will sustain 25-30% earnings year on year. That's not going to happen, right? Kshitij made that point beautifully. Your nominal growth is around 12%. Good companies will do better than that. So if you are assuming 15-18% earning growth, I think that's where the uh, and that's whenever you get opportunities, when P multiples have fallen but the business cycle is not turning, that's the time to get a little overweight. On the credit cycle, I think it's slightly technical for any retail investors to track, but the best way to do that is to track the bank credit growth. Right now, if you see, the bank credit growth is around 8%, which means neither you are like expanding credit too much, neither there is very low credit. In fact, 8-9 is slightly on the lower side if you ask me, considering our potential. But there are banks like HDFC reported a 20% credit growth. ICICI reported 18% in Q3, which means they are gaining market share, right? So look at earning in relation to credit cycle. I think it's more suitable for maybe financials And if you think that, let's say, uh, uh, price to book is low, वहाँ पे पी से ज़्यादा पी भी relevant है financials में. If you think the P or PB is low and the company is doing better than the market credit growth, I think that's an ideal combination to get.
Gurmeet,
I think you're not audible, Kshitij.
Kshitij, you there? I think he's on the route. No problem. Mishika,
Oh,
please go
okay.
ahead.
Yeah. So, like we see textile, sugar, paper, like, these industries have a lot of government intervention, and just एक news आती है, there is a rally and then it cools down again. It cools down in the short term as well as बहुत बार होता है long term में that, this is the story, but until it plays out, we don't know how is the future going to be. So, do we see a structural shift in these sectors, and, what is the future outlook as per you on these sectors?
See, what I'll do, Mishika, here is that I will obviously cover textile and other sector, but I think the theme which I like is this entire revival in manufacturing. I think what you're seeing right now is, and this is led by obviously revival in demand, PLI, prudent duty interventions by the government. So this is happening across sectors, not just restricted to, let's say, textile or chemicals, etc. Now, let's take few examples, right, of PLI schemes. So let's take, for example, pick up electronics, right? Government came up with a PLI. One of the big beneficiaries has been Dixon, Amber Enterprises, companies who are into outsourcing of appliances. So India में पहले क्या होता था? You used to get first phase of outsourcing, which is like deepening of assembly lines. Simple language में labor arbitrage वाले contracts मिलते थे कि labor सस्ती है, ये part इंडिया में सस्ता बनेगा, यहाँ से बनवा लेते हैं. That was the first phase of growth for electronics in India. Now the second phase of growth is is you becoming competitive, you participating in the design part, in the component ecosystem, in backward integration, and this is where the value addition manufacturing comes. So if you look at all big brands, including Apple, including designer labels in textile, including pharma companies, their focus now is on branding and placement, right? A large part of the manufacturing is getting outsourced. So one big beneficiary obviously of this has been Dixon and Amber. If you hear Atul Lal, who's their MD, in various forums, he's talking of migrating from OEM to ODM. So OEM is original equipment manufacturing, ODM is original
Right.
design manufacturing. Yeah. So they've already moved into ODM in lighting and washing machines. They're trying to replicate it in television and mobiles, right? There are new areas of spending which is coming, which is telecom, which is wearables, which is these smart watches and connected devices. There's a huge capacity, right? And this requires somebody who really understands this business. So I just give you one example there. So next one is, let's say, APIs and customer synthesis, right? So recently you would have heard Divi's Labs had $100 million sale for Tolnupavir, which is a API used for COVID. Now Divi's is
Right.
one of the top API suppliers to most innovative MNC pharma companies. वो अगले 4 साल में उतना कैपेक्स कर रहा है जो उसने लास्ट 30 years में नहीं किया था. You would have heard Dr. Cheva on Loris Lobs talking about two new APIs, which is Flaxoid and Tolupavir again, right? Getting so a lot of it. So you would see about Deepak Nitrite doing it in phenol and new chemicals. You would hear Aarti Industries talking of benzene derivatives, right? It is happening across sector. Textiles you picked up. The scheme is more on man-made fiber and technical textiles, right? So companies which are more integrated, the likes of Urban or KPR, etc., they're likely to participate in the PLI. So look at manufacturing as a basket. Pick up winners in them. Pick up companies which are doing capex. Pick up companies which are going down the value chain, and I think that's where the proposition lies.
Right, very well explained, sir. So, what is your take on the HDFC merger that, the news that came today?
Oh, I'm delighted. I mean, I'm an HDFC Bank customer for. I'm a customer. I'm an ex-employee. I'm a shareholder for last 12, 13 years. I think I still buy. A lot of people ask me. Yes, I still buy 10 shares every month. I've continued my stock SIP, and I think what it does is that it sets the template of how things are going to be in future. You will see a lot of big NBFCs, uh, you know, contemplating. I think getting a banking license. We have to see who goes in next. RBI anyways has changed the policy. It is universal banking on tap licensing. Uh, it creates the big behemoth. I think near term there'll be some pressure. There'll be some drag on the P&L. Because क्या होता है कि you have to your requirement for SLR and CRR will go up because the balance sheet size has gone up to 18 lakh crores now from 12 13 lakh crores. You also have to do more priority sector lending again because 18% let's say has to be towards agriculture, a certain portion has to go towards micro lending, etc. So and these are low yielding products, affordable housing, agriculture lending, etc, which means it puts a bit of a drag. Plus, your CASA will come down, right? Because the HDFC Limited is an NBFC, raises money through deposits. So once the CASA ratio falls, it will take time for rebuild CASA and get the cost of funding down. But long term, I think it's extremely constructive. I think this has the potential to re-rate a lot of sectors. Also, RBI will look at how they have to create a structure for banks ownership in insurance and asset management companies. I think that clarity will also come. So I think policy wise, structurally for the sector, hugely positive, much needed in HDFC. And I think this has the potential to re-rate a lot of private sector banks.
Yeah, that
Very
was
well explained, sir. So my next question will be like we often talk about investing, and many people here might be facing some difficulties. Maybe it's related to patience, maybe it's related to studying about a particular company, a particular sector, or a particular asset class. We often see that people who are generally unsuccessful at investing, the traits are very common. But when we talk about successful people, every successful person might not have common things. So I'm here to ask like not what to do, but like what unsuccessful people generally do so that like they're not able to play out this investing game, or maybe in the trading space also, like having some patience or other aspects which really helped you in your personal life as well as in the investing journey.
Kshitij, you want to take this?
You go ahead, Gurmeet. I'll add. You go ahead. I'm
Yeah. So
driving
I
on the
think
road.
I think
Let
yeah
me
I
reach.
think yeah I think there is nothing called unsuccessful. Yeah. I mean, uh, uh, I don't think so unless you take a lot of leverage. And I think few things to avoid are: number one, uh, uh, seeking quick gains, free lunches, overnight riches, social media tips, including me, right? अगर मुझे मल्टी बैगर पता है कि ये स्टॉक 100x होने वाला है, why in first place I'm going to share it on social media? You tell me first that. Second, if I'm so good, right, in cracking and making 10% every month or 12% every month, I will not be selling those services, right? Thirdly, there is no winning formula, Keshav. I think one of us, I always make this point. ये social media में ना हमने झगड़ा चालू किया हुआ है. कोई वैल्यू इन्वेस्टिंग बोलता है अच्छी है, कोई बोलता है ये कोई सौरभ मुखर्जी का मजाक उड़ाता है कि you can't buy at any price. Somebody says, I look at charts. Somebody says no, momentum investing is good. Price action देखो. आपको जो सूट करता है वो आप देखो. But build up discipline and process around it. So, for example, I buy a certain quantity every month and I buy when I have more liquidity. I've kept it very simple. I will buy good businesses and I will buy them for 10, 15 years. If Divis is doing a capex today for next 3 years, thinking of next 10 years, why should I be looking at 3 month performance of Divis Labs? Right? So I don't get this logic. I mean, if HDFC is merging with HDFC Bank, and that merger will take 18 months, where they are creating a giant where the balance sheet will be 18 lakh crores, वो बोल रहे हैं कि इस साइज में भी 70% HDFC लिमिटेड कस्टमर्स डू नॉट हैव HDFC बैंक अकाउंट्स. मैं 18 मंथ का व्यू क्यों लूं HDFC बैंक में? So I think the way you look at businesses, you should look at owners and not rent seekers. Rent seekers are the one who want every month returns, want to monitor every week returns. I am not a rent seeker. I'm an owner, and I will think like an owner. So you think like an owner. Second, the point I make, you don't ridicule or criticize anyone, right? आपका अगर कोई आपका friend option writing करके पैसे बना रहा है, he would have developed some kind of a knowledge skill around it. If somebody is making money by doing momentum investing, Respect that. आपको झगड़ना नहीं है कि it's not my way or the highway. Don't ridicule anybody. I think that's when, and don't try to, I will beat this, I will beat, Nifty, I will beat the falling fund manager. क्यों करना है? किसको दिखाना है? Right? End of the day, it's your portfolio. You will make money on that, right? So getting into this competition of, beating this guy, doing that, I think I find this extremely overrated. मेरे को ये सारा discussion, ये alpha generate किया मैंने 5% का, I have beaten this fund manager, I have beaten that fund manager. अभी मतलब किसको पता है और आप किसको बता रहे हो, right? So have your goal. Obviously, you should keep a track on, how things are playing out, and you should not be underperforming hugely the broader market. So I'll give you an example. Nasdaq का 10 साल का रिटर्न 24% कैगर है डॉलर टर्म्स में. तो इवन इफ आई बाय Nasdaq, I would have made almost 7-8 times in last 10 years. मुझे क्यों किसी को बीट करना है, right? So I think do a combination, and the last thing is keep learning, right? And the day you think that I've arrived in life and I know everything, और इसको कुछ नहीं आता है एज फंड मैनेजर को, ये there's something to learn from everyone. I think this is one line which makes you learn. See, imagine if somebody is doing a 1 lakh SIP, वो भी ट्रैक कर रहा है ऑयल का प्राइस क्या है, रशिया में क्या हो रहा है. You can, किस लाइन में आपको इतना सीखने को मिलता है? Do you learn something when you buy a plot or you buy gold from a jeweler, right? But here you learn so much, and I think respect that, right? And just be a learning machine, and I think things will be okay in the long run. Yeah.
I read somewhere. I read somewhere that maybe as an investor or as a trader, मतलब जितनी हमें देश की चिंता नहीं होगी कि अच्छा यूक्रेन में वॉर हो रहा है, यहाँ पे ऑयल के प्राइसेस इतने हो रहे हैं, करेंसी का इतना एक्सचेंज हो रहा है, मतलब इतने इकोनॉमिस्ट्स को उतनी टेंशन नहीं होगी जितनी एज अ ट्रेडर और इन्वेस्टर हमें होती है. सो दैट्स अ वेरी डिलाइटफुल थिंग. एंड वन थिंग आई वुड लाइक टू ऐड हियर इज दैट कि जनरली जो इशू रहता है ना, दैट्स नॉट समथिंग अबाउट परसेंटेज. लाइक some people say कि हाँ 20%, 25% or even 15-16% is more than sufficient. But the thing comes with amount. Like let's say I invest 10 lakh rupees, and if I'm generating a CAGR of let's say 20%, which is also very very huge, and the amount wise or the rupees wise which I earn is just 2 lakh rupees. So 2 lakh is something जो कि अगर हम annual देखें, which is nothing. But if one have a very good corpus, let's say 10 crore, 20 crore, 50 crore, and on that if we see that 20% CAGR, that 20% is actually very good. So I think rather than focusing on the this amount wise appreciation, we should focus on the percentage. And if one wants to increase their return rather than taking unnecessary risk, I think one should first of all study the other instruments that like future and options or other things which are there. I think learning is the number one priority, and to increase the return one should increase the deployed capital and maybe study the like focus on the learning aspect first. Yes.
Keshav, I would like to add to what Gurmeet has said. I'll try to explain it very simply. When you were in school or college and you're trying to copy in examinations, someone who's at number 1 or number 2 position, most of his or her life in school or college, you can go wrong by reading it wrong. That's it. Otherwise, the guy for sure will be doing right things only because he's a topper. In investing, this is not the case. Even best of the best fund managers, they have their own cycles where they go wrong. And point is that people try to copy. You said, now where they go wrong? People try to copy somebody else's style. But success
I
stories.
think he's not
Sometimes,
audible.
am I audible now?
Yeah, now you're
I'm
audible.
saying most of the time people they keep on bragging about their success stories that I have done this. People will not talk about their failures. My friend, without failures there is no success. No pain, no gain. So please, I'm saying this is not that difficult, but it's not that easy also. And you just mentioned Keshav about future and options. I'm saying पहले vanilla products में तो invest कर लो, like mutual funds, like blue chip stocks. And once you have a fair idea about how it works, how you need to track things, then you think about going to the next level. Believe me, I don't know what is F&O. I only know one thing very clearly. If I have a patience on my side, and if I buy good businesses, I'll be home. Third thing, which normally people do with good businesses, HDFC Bank, Asian Paint, Bajaj Finance, Infosys, इसका तो पता है, कुछ और बताओ. So my brother tweeted, Gurmeet ने आज या कल मैंने tweet किया कि that most of the time people have lost more money while looking for next HDFC Bank rather than just buying HDFC Bank. So imagine there is a company which is growing at 18-20% for so many years, and still we are looking for next Asian Paint or HDFC Bank. HDFC Bank market cap is not even $150 billion. Herein, there is much much more money lying on the balance sheet of Apple, which is more than market cap of HDFC Bank. Now imagine the scope of growth with this bank. And again, I'm not recommending anyone HDFC Bank. It is just a discussion basis. So I think when you buy streamline a portfolio, do bucketing of your stocks. Then which stock, which quantity, how much quantity you want to buy. With the best of the best bets, go high on that. So you want to take any chances, go low on that. So that if any accident also happens, it will not hit your portfolio that badly. That's my summation.
That's really well explained. So, Gurmeet and Kshitij, we are just proceeding towards a small rapid fire round where we can just have a quick, one word answers for our questions, and then we can just close the session for today. Who's one Indian or global CEO you admire and why?
For me, it's Chandra Tata. You know what he has done with in Tata other brands. Forget about he was coming from TCS, but each and every company, whether Tata Motors, Tamo, Tata Power, your Tata Capital, any company you pick up from Tata space, it's been turned around. And it's a clear
Right.
example from his this visionary that. Oh, sorry, I have to give one more example. I'm sorry. Go ahead.
No, 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 it's okay, it's okay. You can explain.
Yeah,
Yeah,
yeah.
it's okay. Yeah. What's one favorite book of yours which you would carry for all your life, and you can just keep reading it time and again?
Checkbook, my own checkbook.
That was a good reply. How do you define success in one word?
Taking control of your life, doing what you want to do.
Superb. How many stocks do you hold in your portfolio, and what is the allocation of your favorite stock?
So for Twitter, for theoretical, I often prescribe 2022 stocks, but I hold around 30, because this new themes which came up, which I expanded. But yeah,
Right.
top 10, top 10 stocks of mine would be my 75% of the portfolio, 80, almost 80% of the portfolio.
Okay.
My largest holding is currently is Infosys.
Okay.
Um, if not this profession, like what would your alternate profession would be?
My first job offer was an RJ from Radio Mirchi. My family didn't allow. He said कि MBA करने के बाद RJ बनोगे. And so I want to do a stand up on investment someday maybe.
That will be
Can
great.
we
I
have
think
a demo of
it will
it
be
today?
houseful. It will be houseful.
There might be a lot of clients on the space, so you should come across as somebody who's very serious. So maybe maybe we become a little more less active. Once maybe then. But I do intend to do it. Me and Kshitij both want to do a stand up once on investment. This business has become very serious. Right, we need to enjoy also a bit, so especially during volatility.
Yeah, right.
Yeah.
That's why when we planned this space, I said so that's we don't want a very serious space. We just want a very chill space where we can learn also, and we can have some heart-to-heart conversations regarding markets, regarding life discipline, and all everything together. Just yeah. So
One
what do you
last,
think is the most overlooked sector?
Kshitij, you want to come in? I think we lost him. Most overlooked sector right now,
Yeah.
auto.
Okay.
And PSUs.
And PSUs, okay. So do you think that एक time था lockdown के बाद जब PSUs were trading at below at the lowest book values and also do you think that अभी भी re-rating बाकी है PSUs में?
See, I can't answer in one word. PSU has been a most abused term. I think there are certain PSUs which I think are very good. Who have a lot of moat. They almost have a monopoly, in some cases a duopoly status. And there are some places where there's a lot of turnaround happening at the ground level. I think State Bank of India, in my view, there is a culture change happening. I think a lot of us will see a lot of changes. I use their Yono app. I've done few visits. I have few friends who have joined from Citi to SBI to run the wealth vertical. A lot of you may not be aware, SBI now has a robust wealth vertical. Uh, in the recent NFO of SBI Balance Advantage, the bank did applications from 90% of the pin codes in India, right? So there is a change happening there, right? And it's not that mutual fund is very
Right.
rewarding vis-a-vis insurance and all. So I think there is a change happening. And look at SBI Life, it's the second largest insurer. Look at SBI Cards, look at SBI Mutual Fund, it is again the number one mutual fund. So it's happening across subsidiaries, not just happening with the bank. IRCTC, another company, I think if they can get a lateral hire, I think the traffic IRCTC has is more than Amazon or Flipkart in India. If they can really figure out a way to capture this data which every new age company talks about, huge opportunity. Other than obviously enjoying a monopoly status on train ticketing and other stuff. Similarly, a lot of companies in gas, a lot of companies in city gas distribution, again monopolies. So there are a couple of few good PSUs, and there are equally bad PSUs, bad capital allocation, poorly run.
Right. It was great interacting with you, Gurmeet, and thanks for sharing. Even Kshitij, for that matter, thanks for sharing your insights on markets. And we hope to have a part 2 of the conversation really soon, where we can also have a bit of the stand-up comedy on investing, stock market, right?
Sure. Look
Yeah,
forward.
and
Look forward.
I appreciate your time on behalf of all of us. Wish you and your team a wonderful 2022. And thanks for catching us live on Twitter Spaces. Wish you all a very good day ahead.
Thank you. Thank you so much. Really appreciate it. Thank you. Thank you, everyone.
Thank you, sir.